Okay, so Lee, so some of the smartest people on Wall Street, there's been a recent transaction which I think is important. You want to sort of walk us through it?
Well, this kind of was all summer long. This was kind of simmering that AES, which is a big utility, was, people were scouting that. And sure enough, in the last week or so, it turned out that the GIP or the GIP section of BlackRock, which is gigantic, of course, is going to buy the whole kit and caboodle for a stunning price. But that's the start. That's the start. You're going to see BlackRock, all these big money managers are going to go get a piece of utilities and then make deals with the AI and the data center and all that. And the mere fact, and AES, it was trading. I used to use it a lot as a great low price stock to buy because it was 10, 11, 12 bucks for years. And then all of a sudden it jumped up to maybe 15 or 16 on that report. And then sure enough, it looks like a done deal. And for BlackRock, that's nothing. 10 billion or 20 or 30, whatever their purchase price is, that's
Meaningless.
nothing.
That's meaningless.
Yeah, it's but it's the we're going to see more of this. We're going to see more, and we're going to see more consolidation, not just in utilities, but you're going to start to see it in banks, like we saw today with Fifth
Yep.
Third buying Comerica, which is a big purchase. It's $10 billion. And Comerica was based up in Michigan, and then they moved to Dallas, and that's a pretty sizable purchase. But I think the consolidation is coming, and you're going to see it in utilities. And if they have to, if the big players in AI and data center cloud computing, if they need power, they're going to go out and buy it. And if they don't have the money, they'll go to BlackRock and they'll have them buy it, and they'll pay them to help
Well,
buy it.
yeah. So this goes back to the whole, you know, odd marriages that go on. First, I know utility stocks are up some because of the AI demand, but if you said to me, do those stocks still have a ways to run? My answer is yes. The need for energy for AI is insatiable. But I also think that you're going to start to see three-way deals. You get
Yes,
BlackRock buy a utility, then it puts money into an AI company, and you end up
helps
having
provide you power.
will provide you, will invest in your company, and then you'll help provide us power. It'll be just like what we talked about before. It'll be the round tripping of money that comes when
Absolutely.
you've got chip companies and AI companies. You can now, to me, utilities are a fascinating play. And that is you may see utilities either start to be invested in or them investing in people who are in this food chain that has to do with AI, chips, and energy. I love utilities right now. I
Yeah,
love,
and well, it's we've written about this for well over a year, and it's just been on fire. I mean, Constellation's almost doubled in the last year plus, and it's trading in the 330 $40 range. But every good utility, which 2 and 3 years ago were all yielding 3.5%, 4%, four and a quarter, more, not anymore, not anymore, because when those prices go up, those dividend payments remain the same. So the percentage yield comes down just like on a bond. So I think you're right. I think we're going to see more and more of this, and you'll see BlackRock, you'll see the big hedge funds, you will see people with the power and the money and the ability to get the money. They'll go out and they'll start buying them. And I think this is going to be a trend that we'll see. It's going to exist for a long time because the power needs. The problem is the American electrical grid is so underdeveloped and undermaintained over the last 50 years that it can barely handle just standard grid. We saw what happened to the ERCOT a couple of years ago in Texas when everything froze, and they were a big part of their production was renewables. And when they froze because of all the ice and everything, it was a catastrophe. And there's people that didn't have power in the dead of the winter in Texas, which is contrary to what folks up north would think. It can get pretty cold. It was bad. So if that's just the normal infrastructure, wait till you plug in, you know, megawatt data centers that are just snorkeling up power.
well, it's interesting to think about this. There will be an infrastructure play when it comes to rebuilding the grid
Yes.
because, and And there are companies who can write those checks now. I mean, if you said to me it's going to cost $500 billion to, redo a lot of the grid, I'd say that money wasn't available at all a year ago. Now that the grid has become essential to the future of AI, you watch these there will be capital going into these utilities for the purposes of upgrading
Yep,
their grids,
absolutely.
not just for electricity generation, but in essence, setting up the systems that allow people to move that electricity.
Well, and we've had this discussion. It's you can't quickly throw up a small nuclear reactor. You just can't do that. But we've got more natural gas in the United States and in Alaska offshore than any place in the world, and they can run a zillion power plants on natural gas. So, like we've discussed, utilities still a solid play going forward, and there's still some that pay good, 3.5% and 4% dividends. But also going forward, natural gas because it's only about $3. And if it gets rolling, if it gets really rolling, it could double or triple in a couple of years.
What are some of the names you like there?
Well, for strict natural gas plays, I love EQT, and it's symbol EQT. They're the biggest natural gas company in the United States, from as best I can remember. But then there's people like Kinder Morgan, KMI, which pays a good dividend, 4.5%, 5% dividend. Kinder Morgan is in the job of transporting natural gas, and all of their contracts are fixed year in and year out. And they renegotiate, but it's not the spot price of nat gas or oil doesn't really affect them because they have contracted money. So I think that's a good one. Some of the other ones like Williams, probably a good play. And then just the big boys. I mean, like you were saying, Exxon, huge natural gas presence. Chevron, huge natural gas presence. And both pay at least Chevron's dividends over 4 and Exxon's is 3.5. So, I mean, if you want to play it safe, play the big boys. But boy, the opportunities out there, and they're all cheap because energy's been out of favor for the last year.